friends, welcome back to my channel. My name is Jen and my goal is to help you save money. Today we're going to be talking about mortgages. So I was in mortgages for over 10 years. I've been in consumer loans for 20, but specifically mortgages for 10. And I want to help you with the basics on what you need to know before getting a pre-approval. So what are we going to be talking about? Well, first of all, what's PMI insurance? How much do I need for my down payment and closing costs? How about homeowners insurance? These are the kind of topics that we're going to be diving into, so if that sounds good, let's get going. Okay, so first let's talk about what does your credit score need to be. A minimum of 620 will get you a mortgage. However, you'll want at least a 730 to get the best rate. Also, let's talk about TRADELINE. What is a TRADELINE? So anything that's going to show up on your credit, such as a credit card or an auto loan. Things that won't be on there are rent, utilities, insurance. You're going to want to make sure you have 3 of these trade lines for a minimum of 1 year on your credit report to make sure you can get a mortgage. Now there are some products that offer a 0% such as rural development, but those are in specific areas and they have strict income limits. So really 3% is going to be the minimum amount that I would suggest that you save for the down payment. And if you really want to make sure that you're doing the best thing possible, save 20% of the sales price and you can avoid PMI. So let's talk about that. What is PMI? PMI, also known as private mortgage insurance, is required when you don't put 20% down. It helps the lender in case you go into a foreclosure. It offsets some of their losses. So if you're able to save up 20%, it is a cost that you can avoid. Next, let's talk about homeowners insurance. Homeowners insurance is going to cost you between 1 and 1.5% of the sales price. So let's say you're buying a $150,000 house. It's going to be between $1,500 and $2,250, depending on where you live. In states like California, where cost of living is higher, it could be more. But you're going to have to save this up because it's going to be due whenever you have the closing on your home. So it's one thing to think about. Next, let's talk about closing costs. Closing costs on an $150,000 house are going to run you between $6,000 and $8,000. However, this is something that you can negotiate. The key is having a good realtor. Make sure that you ask your friends and family for recommendation because a good realtor is going to save you thousands. Okay, so let's talk numbers. In this example, you would need $4,500 minimum down payment, $1,500 for insurance, and closing costs are going to be paid by the sellers. So that would be $6,000 that you would need. Worst case scenario is going to be you can't get the sellers to pay your closing costs and you'll need $14,000 in the bank. Keep in mind, it's also good to have a savings account. Houses need to be maintained, whether it's fixing a fence, water heater, or painting them. It's an investment that you're going to want to make sure you maintain. So keeping a savings account is also a good idea. Please let me know if you'd like to know more about the pre-approval process in an upcoming video. Just leave that in the comments. Also, any questions on what we went over today, I'd love for you to comment on that as well. Thanks for watching, friends. I'll see you next time. Bye.